tomorrow. Okay. First of all, MyLabs Plus rarely has problems. Okay. Um, I think Mr. Poor, you've had me for what, three different classes now, 3 or 4?
Yes, sir.
How many times has MyLabs Plus been down?
I can't think of a time. Now, I had a
Okay.
class with
What?
you where we had WebAssign.
I'm sorry, say again?
I did have a class where we had WebAssign, and it never worked.
Yeah, WebAssign was awful. But what I'm trying to tell you is MyLabs Plus does not have problems. Okay? If they have problems, it's because something happened at the site where they have all the servers, or somebody infiltrated with a virus, or something has happened because of like this. You've got to remember, they've had a ton of volume in the last 2 or 3 weeks with all these colleges turning over to e-learning. Their volume has probably quadrupled. So you've got to remember that. So I'm not making excuses for them, but let's pull it up and let's see what it says. I think they had a post on it. I'm not sure. Let me see. I don't see. I wonder if it's on announcements. Let me see if it's on announcements. Course home. Well, mine, let me pull up gradebook because somebody said that assignments wasn't working. Let me go to assignments. Okay, seems to be working now. Let me pull up one. This is 4E. Well, where's 4E? Am I in the right class? Are we on 4E?
Yes, sir. I think so.
There it is. I'm sorry. I didn't know it was at the top. Okay, okay, it seems to be working now. Has anybody had a problem over the weekend?
No.
Okay. Well, I guess it may be certain classes that are having problems. All right. Well, anyway, when you go to log on, make sure you check the top of the page. It'll usually say we're having problems or we're going to be doing updated maintenance or something like that. Make sure you read it, okay? All right. With that being said, let's go to the PowerPoint because now I would say probably out of all the sections in Chapter 4, this section is probably going to be the one that blindsides you the most. Okay? It's not hard. It's tedious, but it's not hard. Okay? You got to know the definitions. You got to know that what is income and what is outgoing. So if you've got a business mind, you're going to be okay. If you have no idea what I'm talking about as far as income and outgoing, then you need to pay attention and you need to write down some of this stuff, even if you think it's pretty simple. Because what happens is, this is accounting, and what happens is people can do the math. The math is real simple. You just don't know what's income and what's expenses. And that's the part of accounting that people mess up. I've talked to the accounting teachers several times, and they said it's not the math that gets you confused, it's the actual definitions, the terminology. People don't know if an annuity is an income or a expense, and that's why you need to pay very close attention. So hopefully everybody can see my page, and hopefully you see the word income tax. And I'm just going to go ahead and start, and I'll bring in the whiteboard as I need to. I wish I could bring it in another, well, I could, but it wouldn't be nice. Anyway, it would be all cluttered. Income taxes. Now, I want you to, you don't have to write down everything, but this is a good place to start. Your gross income. Your gross income, and you need to write this down. I hope y'all are writing this chart down. Your gross income is your contracted income. When you sign a contract that says, I'm going to work at this place for this amount of money, that amount of money that's on your contract is what we call the gross income. When you say you make $75,000 a year or you make $25,000 a year, that's what your gross income is. All right? Now, when you take out your insurance, your federal withholdings, your state withholdings, your Social Security, when you take out all those adjustments, that means your net income. Now, you need to write that down. Net is when you take your stuff out. Net is what you take home. Now, in accounting and income tax, that's not called net. It's called adjusted gross income. Okay? Adjusted gross income, after you find your adjusted gross income, then you subtract your deductions and exemptions. So you need, this is a four-step process, and it doesn't get any simpler than what they're showing you right here. Now, if I asked you what a deduction and exemption was, you would probably say, I have no idea. And that's where the problem comes in with income taxes and accounting. The problem comes in because you don't know what a deduction and exemption is. And we're going to talk about that. Then that gives you your taxable income. All right, so when you minus the adjustments to income, meaning insurance, FICA, Social Security, state withholding, I give to the foundation at Tri-County Tech, I give to the foundation at Clemson, so that is coming out of my check. But that will probably be deductions and exemptions because I give to a foundation, okay? So, but it comes out of my check, so it would come out right about here, okay? Income tax, it would be counted as a deduction. But I have things come out of my check, and I have my 401k, that would come out of my check. So whatever's after 401k, whatever's after foundation, given to the foundation, whatever's after Social Security, FICA, state withholding, federal withholding, insurance, life insurance, after all those things are deducted from your check, what's on your pay stub? That leaves you with your net pay income, which is called adjusted gross income. Then you subtract the deductions that the government gives you. If you got 5 kids, if you got 2 kids, if you're married with kids, those deductions and exemptions, and that leaves you your taxable income. Now let's say you put solar panels on your house and you drive an electric car. Then the government will give you a tax credit for having those two things. Then you take your taxable income and you subtract tax credits. And that is your total tax. That means total tax. And then minus your payments and withholdings. That's where you go back and you look at your stubs and you add up your stubs. And that's what tells you if you owe Uncle Sam or if you have money coming back from Uncle Sam. So this is a very important slide. It's very simple. It's supposed to be simple. But as you see, when we get on into the examples, you know, it can be confusing. All right. Karen earned wages of $38,600. And I would suggest writing down every example that we're doing in this section. Karen earned wages, and you don't have to write it word for word. Karen's wages through $38,600. received $750 in interest from savings account, and contributed $1,200 to tax-deferred retirement plan. Blah, blah, blah. Okay, now her income, her gross income is $38,600. But what else did she do? She received $700. So received means income. So you need to put above received, you need to highlight, and you need to put income. From a savings account, and contributed $1,200 to a tax-deferred retirement plan. She was entitled to a personal exemption of $40.50 and deductions totaling $63.50. Find her gross income, adjusted gross income, and taxable income. Okay? So what do you do first? Well, the received means you're going to add $750 to that $38,600. Tell me when y'all get through writing that down. This is a test question. And it's simple, but you got to know what's what. And I guarantee you, some of y'all don't even know what an exemption is. Some of y'all don't even know what a deduction is. And when I say y'all, I don't mean 6 people that are Skyped in. I mean anybody that's in this class. If I was to ask, let's say I have 20 people in this class, and if I asked everybody to raise their hand that knew what an exemption was or a deduction, I guarantee you I'd only get 1 or 2 people that actually knew it. And that's because their mother and daddy was an accountant and they've heard them talk about it or something to that effect. They overheard it. Most people graduate high school, don't even know what a personal exemption is or a deduction is. So, y'all got it written down?
Yes, sir.
Okay. So, you're going to add that $38,600 plus the $750. Let's see if they go ahead and add that. Yeah. So, $38,600 plus $750. Now, why did they add the $750? They added the $750 because of this word right here. Received. What could be, let's say that Mr. Poor works at La-Di-Da Incorporated, and he makes $38,600 a year. And he has a savings account, and he got $750. What else could be income for Mr. Poor? Just think up some things. Somebody give me another source of income if he's working 30 to 40 hours a week at La-Di-Da Corporation. What else could Mr. Poor be doing to bring in income?
Beef cattle.
He could have beef cattle, and he sells beef cattle. Let's say he sold 12 cows, 1 cow a month, or a steer. Let's say that is that income? Oh, hell to the yeah. And you have to report it because it goes into your bank account. And that's the cattle barns, they keep very strict records on who they sell their cows to because of USDA, okay? And who they give their money to. So just like when I deposit a check, it's got to have my name on it or it can't be put into my bank account. Let's say I put it in my son's name. Well, the bank won't accept it. We can have an account for my son, and I can put that money in my son's account, but I cannot put that money, if it's written to Walt McClure, I cannot put it in my bank account. So it's very, very stringent. So selling livestock, that could be income. What about selling hay? That could be income. Now, would that be documented? Probably not. Because most people that sell hay, they usually use what instead of a check?
Cash.
Cash. And anytime you have cash, can Uncle Sam track cash? No. That's why drug dealers use cash. You don't see a drug dealer using, let me swipe that credit card. That don't happen. All right, what else could be a form of supplemental income? That means I want y'all to talk.
Babysitting.
Babysitting. Now, again, Miss Rankin, do they usually write you a check or give you cash?
Cash or like Venmo.
Cash. That's what you want because you don't have to hold anything. But let's say that Miss Rankin, she was working at La Di Da Corporation, and she has a job just like she could be having a side job as a babysitter or a house sitter or something to that effect, or a dog sitter or whatever, and she could be bringing in the money. She better start documenting it because, when you start making a lot of money, what does that raise eyebrows at? Where does that raise eyebrows? At the IRS. So you gotta know, as the old saying goes, when to hold them and when to fold them. You need to, if you're bringing in $12,000, $15,000 a year, you better start documenting it. But yes, that would be another, any kind of sitting. How about, let's say that Miss McBride owns 2 or 3 houses that she rents, and rent comes in. What is that? That's income. What if Miss Howell bought a bunch of stocks and she sold them? That's income coming in. It's not income until she what? Until she sells them, just like the cattle. Cattle and stocks are about the same. One walks around and eats, the other one doesn't. Okay? And let's say Miss Dandenau, let's say that she has some oil wells out in Texas. Okay? Whatever they produce each year, that's income to her. So income is anything that comes what? Income is anything that comes what?
In your bank account?
In. Got that? Income is anything that comes what? In. Y'all see the play on words there? Okay.
Yes, sir.
Income is what comes in. Now, let's get back to it. So there's her gross income. $38,600 plus $750. So anything from here on out is going to be deducted from that because that's her gross income. Now, if she had dividends from selling stocks, that would be added. If she sold 12 cows, 12 steers, one a month, then that would be whatever. Let's say that she sold a 400-pound steer at $1.50. 400 pounds at $1.50 is what? $600, $600 or $700. 6 times 12. I'm just saying 6 times 12. 6 times 12 is what? 72. So that'd be $7,200 that she needs to add to that gross income. Okay. Now what do? Well, you got to subtract some now. Her $1,200 contribution to a tax-deferred retirement plan counts as adjustment to her gross income. So her adjusted gross income would be $39,350 minus $1,200. Okay? Now, it's important that you write that down. What does that word right here say? I can't highlight it. Shoot. What did she do with that $1,200? What's that word say right there?
Contribution. Okay.
How do you contribute? I want you to tell me how you contribute money to someone.
Mm-hmm.
One, you take it out of your pocket and you give them the cash, right? Or you write them a what?
Check.
Okay. Now, the reason I'm bringing that up is because when you take money out of your pocket or you take money out of your bank account, that is going to be subtracted from your gross income. I'm sorry, your adjusted gross income. Now, a lot of you are saying, well, why is he being so? You've got to remember the math is not what gets you here. The problem that gets you is when to do what. And a lot of people would say, well, she contributed, so that should be added. No. If you contribute, you're writing a check or you giving somebody cash. If you write a check or you give somebody cash, you are not adding, you're what? You're subtracting. And you got to remember that when you write a check to your IRA or you write a check to a stock account that's tax-deferred retirement, meaning mutual funds, then you have to subtract that $1,200 because you're writing a check or you're giving away your money. So that comes out. Okay? Oh my gosh, look at that. Y'all want to check that math for me? Did y'all catch that? 39,000
that 7's not supposed to be
minus
there.
1,200 is 387,000. I believe that's supposed to be $38,715. Somebody check that for me.
No, I think it says 38,150.
38,150. So that 7, somebody needs to make a note that that 7 needs to be knocked out there. Okay? Thank you. I appreciate you doing that for me. Okay, any questions so far on this? Now again, I'm going ultra slow here. I'm not going slow because I don't feel like teaching today. I'm going slow because this stuff will get you when you got a paragraph and it's about that long, and it's telling you what's coming out, what's going in. You've got to dissect what's added and what's subtracted. Next. To find her taxable income, we subtract her exemptions and deductions. These are government, so you need to write down exemptions and deductions are assigned by the government. G-U-V''MENT, government. Uncle Sam determines those exemptions and deductions. I'm going to write that down. So you need to highlight the 40/50 and the 63/50. You need to highlight those, and you need to say given by government. So somewhere in the question, you're going to have to go to a table, or it's going to have to be given to you in the question. That 40/50 and that 63/50, somebody's got to give you that information. Because they're not gonna, you're not gonna calculate it. You're not gonna. It's got to be given. So you need to highlight that 40/50 and that 63/50, and you need to put beside it given. It's got to be given somewhere, or you've got to find it somewhere. So I need you to highlight the 27,750, and that is your taxable income. So you need to highlight that 27,750, and that is your taxable income. Now, have you ever heard of this? I'm in the so-and-so tax bracket. Have you ever heard that before? That 27,750, that's your tax bracket. Now, where do you find the tax bracket? Well, that's given by the government. And we're going to probably see that on the next couple of slides. So make sure you got that written down. That's a very important part where you highlight that 40/50 and that 63/50. Now, I only got 6 people in the room here. So, Miss Howell, have you ever seen anything about income tax? Have you ever been around an accountant, or you ever heard some of this stuff before, or what?
My mom's a accounting professor.
So she knows this stuff pretty good. Have you
Yes,
ever
sir.
heard of it before? You know, talking to her or what?
I've heard her mention it. Yes, sir.
Okay, good. Well, I'm gonna go ahead and tell you, she knows more about it than a math teacher does. Okay. Now we could throw some X's and some calculus around, and I doubt she would She probably might say that I would know a little bit more. But when it comes to income tax, there is nobody better than an accountant. Okay?
Yes,
Because
sir.
they know the ins and outs. Miss McBride, how about you? Have you ever been exposed to any of this terminology before?
Yes, sir. My dad's an accountant, and my mom works at a bank.
So you've had exposure. You're in the minority. You and Miss Howell are in the minority because I'm gonna be honest with you. I see a lot of high school students that come out. They've never heard of this stuff before. Mr. Poor, how about you?
My mom is she's an accountant, and I've took the accounting class.
Well, yeah, I thought you did. And tell me, am I right when I say that it's not the math, it's the terminology?
Yes, it's terminology. Yes, sir.
Yeah. Because a lot of people don't know what an annuity is. A lot of people don't know what deferred compensation is. And you don't know, if you don't know what it is, you don't know whether to add it or subtract it. Miss Rankin, how about you?
I mean, I've seen my parents doing taxes, but that's about it.
You've seen this stuff in your taxes?
And my parents' taxes.
Okay. So you've been exposed to it, but you really don't know what it is, do you?
Yeah, correct.
Okay. And don't feel bad because, like I say, you're in the majority. How about you, Miss Webb Greenlee? Okay, she's eating breakfast. How about you, Miss Dandenau? Okay, they're sleeping. They went back to bed. All right. Or they can't talk, one of the two. All right, so it's good to go ahead and write this down and go slow because when we get to the problems, you're going to say, I'm glad he went slow. All right. Tax calculations depend on your filing status, which consists of the following 4 categories. You're either single, you're married, you're single but married, or you're what's called head of the household or something, joint or head of the household. So here they are: single, unmarried, divorced, legally separated, and happy. Okay, what's next? I'm sorry, I should have said that. Next, married, filing jointly. Married, filing separately, and of course, head of the household. Write those down, very important. And of course, you don't have to write it down word for word, but you need to write down what makes, what sticks in your brain. Okay? So married, filing jointly, you do everything together. Married, filing separately, you're married, but you do them 2 separate tax returns. And you're going to see in some of the homework problems or some of the problems that we do, sometimes it saves you money by doing married, filing separately. Head of the household, unmarried, and paying more than half the cost of supporting a dependent child or parent. Okay? Unmarried and paying more than half the cost of supporting a dependent child or parent. Notice it says parent. Okay, so don't think this is sexist or anything by saying head of the household, because you could actually be taking care of your father. Okay? And if you're taking care of your father, that's kind of like roommates. Okay, if you're taking care of your father and you're bringing home most of the money. So if you're bringing home most of the money and your father's bringing home retirement and you're taking care of him because, let's say, he has a bad leg or he can't walk or something, he has a heart condition or something to where y'all both live together, but you pay the expenses, then you would file under you instead of your father. Okay? That's the kind of example beside of the box, because a lot of people think, oh, well, that's sexist, that's being sexist. No, it's not, because you got to think of it in terms of not just children, but parent. So those are the 4 statuses. Most people do single until they get married. And then when they get married, that's when they have to talk to their accountant and say, well, here's my income, here's my wife or husband's income, whatever the case may be. What do you think? And the accountant will say, well, you probably need to do this or do this. Why? Because they have experience. Just like I'm not experienced with taxes, so I wouldn't have a clue. All right? But if somebody walked up to me and said, I need you to tutor my daughter or my son in algebra, I would know what to do based on what you're wanting, just like an accountant would know what to do based on experience, what to do, in that case. So the married filing jointly and the married filing separately is a choice, but it needs to come from input from an accountant. Capiche? Everybody got that written down? So the first step of doing your taxes is to find out what's income and what's expenses and what's deductions, and find that taxable income. The second thing is that you say, okay, how am I going to file? That's the second thing. And let's say you just file single. The third thing is the brackets. And that's probably what they're going to show next. Okay, adjusted gross income. Okay, you have to know, okay, they're going to go through the exemptions. Okay, now, how do you find those exemptions? Well, you look under single, married jointly, married separately, or head of household. And it's fixed amount per person. So if there's 2 people in the house, you would multiply it by 2. Vary from one person to the other. Married would be double what single is on the deductions. So exemptions, make sure you multiply that by each person in the house. So if Mr. Poor is filing single and he's got the 2 kids, he's got custody of 2 kids, then he's got 3 people in the house. So chances are he's going to file 3 exemptions, because that means more money that comes out of his taxable income. The less money you're taxed on, the better. Think of it like this. If you go to the grocery store, what's easier taxes, $15 or $1,500? I want y'all to reply back.
15.
15 is less taxes. So if you could take that taxable income and you can subtract from it and make that $1,500 get closer to $15, that's a good thing. Everybody got exemptions and deductions? Yes or no?
Yes, sir.
Okay. I
Yes,
guess
sir.
y'all got it. A standard deduction depends on your filing status. I just told you that. Okay? Depends on whether you're married, single, whether you have. Now, that's a one-time thing. You don't multiply this by how many people. Deductions, you don't multiply by
Priority
the people.
1 message coming in
Exemptions,
on
you
channel.
do. This class is not over, is it? Why these people don't follow directions? I say 15. Did I say 15 minutes before class? Yep.
Yes, sir.
And we don't have class until, what time does class start in the next class? 10:10? That's freaking 30 minutes from now. 15 minutes before class is what I tell people. All right, I'm sorry. I'll shut up. Next. An itemized deduction is the sum of all the individual deductions to which you are entitled. You ever seen people put shoe boxes and have receipts in shoe boxes? That's itemized deductions. And a lot of people find out that unless you own a business and you're buying 15,000 things, like let's say you own a floral gift shop. Well, you got to buy 15,000 things for a floral gift shop. You got to buy the different flowers. You got to buy the decorations. You got to buy the vases or the bowls or the dishes. You got to buy the balloons. You got to buy the ribbon. You got to buy. When you have all that different little stuff coming in, then yes, you're going to use the itemized deduction. But usually what you find out, unless you own a small business or to big business, usually your standard deduction is going to be more than your itemized deduction. Okay? Most of the time, if you're just a resident and you work at La Corporation and you don't do anything else other than that, then your standard deduction will probably overwhelm your itemized deduction. Now, if you have a small business, let's say that you have cows on the side and you have a farm business, then yeah, the diesel costs, the feed costs, the the medicine, the wormer and then you would itemize that, and you would get a itemized bill from Tractor Supply at the end of the year. You get an itemized bill from your fuel company that you buy fuel from, and you would turn that in, and the accountant would say, okay, this is less than the itemized, so I think we go with the standard, or the itemized is more, so we're going to go with the itemized. Okay? So usually when you're talking about an itemized, you're talking about somebody that has a small business or, small to big business. Suppose you have the following deductible expenditures: $4,500 for interest on a home mortgage, $900 for contributions to charity, and $250 for state income taxes. Your filing status entitles you to a standard deduction of $6,350. Well, what's $4,500 plus $900? That's 50 what? $5,400? Yes or no?
Yes.
Okay, what's 5,400 plus 250? 5,650. So your actual deductions is 5,650. Your filing status gives you a deduction of 6,350. So what would get you closer to that $15 from the 1,500? 5,600 or 6,350? Come on. What would get you closer to a smaller amount? The 5,600 or the 6,300?
Would it be the 5,600?
If you wanted to get closer, if you were at $15,000 in the bank, or if you were at Walmart and you spent $1,500, and taxes on $1,500 versus $15, and you wanted to get that 1,500 closer to the 15, would you subtract the bigger amount or the smaller amount?
The bigger amount.
So which is best, the 6,350 or the 5,650?
The 6,350.
The 6,350. So you need to make that note. When you're trying to get the taxable income down, you want to subtract the bigger amount. So in this case, the 6,350 would be what you want. Let's see what they do. So 49, these are itemized deductions. Why are they itemized? Because each one has a title. This is $4,500 for home mortgage, $900 for contributions to charity, and $250 for state income taxes. So these are all, okay, so I am close to being the class. Okay, 4,500, those are itemized. Those are different things. Diesel costs, personal cell phone, mileage on car if you drive, your car, part of the business. Okay, all that's itemized. But these three are only counted. Okay, so you would add those three together, you get 5,650. The government is going to give you a standard deduction of 6,350. So the standard deduction will put you better off. No, it won't. 6,350 would put you better off. I don't know why they said that. Well, that's not right. No, that's not right. You would go with the 6,350 because the 6,350 would take more off your taxable income. I don't know why they would say that. You always go with the higher deduction. Always. Y'all can ask y'all's mother and fathers that are accountants. You always go with the higher deduction. That's not right. Okay. Well, you'll see in the examples. All right. Now write these down. Progressive income tax means that people with higher taxable income pay a higher tax rate. Now this is very much discussed about. Okay, is this fair? Well, I guess I'm a little bit libertarian versus conservative. I believe in a flat tax. I believe you should be taxed on what you have. Okay, not what you earn, what you have. So if you got a $100,000 house, you should be taxed on that $100,000 house. If you got a $10,000 house, you should be taxed on that $10,000 house. I think people should be taxed on a flat tax as far as their income. That's just me. Okay, I've got one opinion. I don't think you should be penalized because you worked your butt off or because you came up with an idea that was great. Okay, I don't think you should be penalized. That's just me. But a progressive income tax, that's what we have, means that if you make a lot of money, you're going to be taxed higher wage. Okay? You know me, I'm a firm believer of you are a product of your own decisions. If you decided to party all your life, then why should I be penalized because I didn't party all my life? You know, and I use that as a loose example. But a progressive income tax, to me, that's not fair. And that's just my opinion. But anyway, that's the difference between a flat tax and a progressive tax. Marginal tax rates are assigned to different income ranges. We're going to talk about that. That's the brackets. Marginal tax rates, those are called the brackets. There they are. Now I doubt this is the new one because this is 2017. And in 2019, 2019, the taxes were changed. So I want you to write this one down. For your homework and your test, you probably need to put this on an index card. Now, of course, all you have to do is pull it up on Google. You can put this in an Excel spreadsheet if you wanted to, or you can take a picture of it, print it out, and put it on, But the best thing to do is just Google it. Let me see. Go here, go to Google.
For our test, should we use the most recent one or that one?
Well, I'm going to show you both of them, and for the homework and the test, you're going to use 2017. 2017 tax brackets. And you can go to images. And here's one right there. Now you can see that, well, no, let me go back. You need to find one that goes on your card. Here's one, something like that right there. No, yeah, married, there we go. And go back and pull up 2000, I think it's 2000 current, you could say current. Go back and pull up current tax brackets. And you can also go to the IRS website and pull it up. 2018, this might be it. You're going to see a difference. Yeah. No, why can't they just do something simple? Hold on a second. Let me call it up by marginal tax rates. There, let me pull marginal tax rates. Marginal tax rates. Current marginal tax rates. Hell, I can't type. I might as well just quit. Or 2019. 2019. Anyway, do a little bit of research and you should be able to pull those up. I don't know why it's pulling up everything but that. But just do some research on Google and you should be able to find it. Here we go. Married, filing separately. Married, filing jointly. Head of household. There we go. And if you'll look, if you make over $426,000, how much do you pay to Uncle Sam? 40%. So that means on every dollar that you make, 40 cents of it goes to Uncle Sam. Now, you could open that into a whole discussion of why. Okay, you could open that up into a whole nother discussion. Why does the government need 40 cents of every dollar that you make?
Priority 1 message
Okay,
coming in.
that's another discussion. All right, but the whole point is, why does somebody that's done well have to pay more? I don't agree with that. And I don't agree with somebody that makes poverty level having to pay 10%. I think everybody should pay the same flat tax rate and also be taxed on what you have. So, but that's just me. But that, I would suggest highly that you print out that one and you print out the 2017 and put them on the back of the index card. And the reason you need 2017 is just to have it. Hold on a minute. Number lock. 2017. There we go. And put those on your index cards. Because I'm going to tell you, it's a whole lot easier to have an index card with your brackets on it. I'm trying to find it again for you. Something like this right here. Here's one right there, 2017. It doesn't have the deductions, so that might be why you need the one out of the book. Or you can go to your book and pull it out of your book. But I'll pull it back up for you so you'll have it. There is what you need to put on your index card for this test and for this homework. Now, this is where things get kind of crazy. So I'm going to stop right here because the next slide is going to tell you, I'm going to leave that up so people can pause the video. And this is where we'll finish class and you take a picture of it or whatever the case may be. But this is where things get a little bit complicated because if you make, let's say you make $100,000. Well, $100,000 is between 91.9 and 191. So we have to go up to the 191, and whatever over 91.9 is taxed at 28%. So we have to go through and we have to cut off. We have to partition your income to the bracket so you're not paying, all at 28%. That's what's called progressive. So you pay the first $93.25 at 10%. You pay $39,950 minus $93.25 at 15%. You pay $91,900 minus $37,950 at 25%, and you pull $100,000 minus $91,900 at 28%. That's where it gets a little bit hairy, and we need to go through a couple of problems before we go to that. So this is a good time to shut her down, and I will stop the recording.